Um, H for Hustle podcast. Welcome back. We have another great guest today. We have Geershie Vann, the founder and CEO of Magma Capital Fund. Geershie, welcome to the show.
Thank you. It's a pleasure to be here.
So, Geershie, if I was to meet you at a dinner, what would you say you do for a living?
Well, that's a great question. Um, in a nutshell, we're a hedge fund. We focus on utilizing machine learning to select optimal portfolios for different days. But I think a more honest answer to that question would be it would depend on how we interacted, because some people like a more technical answer, some people like a more simplistic answer. So case by case.
Got it. Okay. So you wouldn't get into the nuances of machine learning if the person really didn't care about that.
Not necessarily. Yeah. I mean, some people are more interested in like a leverage component, let's say real estate investors. Some people are more interested in the machine learning component. Some people are more interested in, investing in indexes. So it really depends on the person.
Got it. All right. So when people hear hedge funds, they think, man, this Jerome's talking this really super well-connected. This guy must have been like a trust fund kid his whole life. Like he has much connections. Let's go back a little bit. Before you were CEO of where you are now, what were you doing for a living then?
So at heart, I'm a systems person.
Okay.
I'm drawn to macroeconomics, which kind of form the basis of the thesis behind the strategy, because I love understanding systems that kind of determine behavior. And so I spent around 2.5 years as an analyst, first entirely in the healthcare sector, but first working for a company designing a system that underpinned a preventative maintenance program.
Okay.
So it's something that would be more familiar to a lot of people. And then afterwards, doing analytics for a dialysis company and kind of designing the predictive system that would allow them to make business development decisions.
Got it. So is your background more of like programming and that side of it, or is it more about like figuring out problems?
That's a good question. I mean, my background is in finance, but my heart is in, I guess, entrepreneurship, figuring out problems, understanding how finance works. I guess I'm more interested in like the how things work than in the the day-to-day, how to make it happen, that type of thing. It's more big picture. That's the draw for me.
So the broad scale, not the micro, not like the nuances of doing it every day, but how does it all work collectively?
Yeah, and I think that's one of the really nice things about entrepreneurship is if you enjoy the vision component, if you enjoy sketching out how something could happen, and not just thinking like for the next 30 days, but thinking 6 months out, 12 months out, etc., which I love doing. I actually really struggle to think in the context of like a week.
Got it. So you're more like a vision caster, like really big vision. And then you're like, guys, get to work.
well, actually, it's funny because sometimes it comes back to bite you, because a lot of times, you need to think in the context on the time scale of a week as well.
Yeah.
But yeah, I guess you could say that.
All right. So you're an analyst. You're doing an analyst. You work for multiple companies. Was it always in your mind that you were going to go out and start your own thing, or was it what was the spark that kind of drove you to that?
It's a great question. Well, I've always loved entrepreneurship. When I was 5 or 6, I negotiated to buy my dad's shoe shine kit, and then I used to go around and polish people's shoes for like $5 a shot.
Wow.
And then when I got a little bit older, I set up car washes to raise money, and then and kind of, I guess what was cool for me through all of those was there was always this purchase that was necessary to get the business up and running. So like in the case of the shoe shine kit, my dad wouldn't sell it to me for free. So he wouldn't give it to me. So he was like, no, you have to sell it for $20. And then I had to go around and raise that $20, which doesn't sound so difficult, but if you're like 7,
it sounds like a lot of
So then I went around in my synagogue, and I negotiated to have people front the money, and then I would give them a shoe shine in exchange for that money.
Got it. So you were pre-selling shoe shines before you even had the kit.
Exactly. And so that kind of like negotiation, I loved that. I found it really compelling.
Got it.
And then kind of that coupled with desire to understand systems and, an appreciation of analytics. At the beginning of 2019, I started researching, creating my own fund and kind of designing something that could do well in different market environments.
Got it.
And that kind of got me thinking, okay, well, what's the pulse of the market? And like, what is the thing that tells you how market participants are feeling? And that drew me towards volatility, which is essentially just an expression of how market participants are feeling about the market on a day-to-day basis.
Got it.
And then I started slicing the market down into different segments and optimizing the allocations for each of those segments. And so I started working on that at the beginning of 2019, and then I finished at the beginning of 2020. So that became my hobby after I got home, put the
Got
kids
it.
to sleep.
And then just start working on that. So,
Yeah, just modeling.
when people hear hedge funds, to start a hedge fund, most people think it's like, $100,000, $100 million to actually start up, right? You need to get a really big check. How did you go about raising funds? You hear about your past, negotiating your shoe shines. How did you go and raise funds for this? Because, you didn't seem like you're an analyst making, a ton of money. You were making decent money, but obviously you weren't making that type of money, throw that in your investment. So how did you go about raising the money?
Yeah, I think I once met with someone and he told me that the way that you raise money is not to convince someone that there's no risk, but to demonstrate that the upside is greater than the downside.
Got
Because
it.
there's a lot of people out there that have capital. And I like to differentiate between capital and money. Money is the thing that you use to, live your life on a day-to-day basis, to go out, buy groceries, pay rent, that type of thing. Capital is kind of excess money. It's money that you want to grow for a long period of time, and then it becomes generational wealth. So, everyone needs some investment opportunity. And if you can get in front of people that have capital and demonstrate this is an idea that could grow into something very big, and you could earn a substantial return on your capital, then it becomes something that's really compelling for a lot of
Got
people.
it.
Now, that's not to say that the first meeting that you have, someone is just going to, fork over a check for a
You're
large
like, hey,
amount of
the
money.
upside is greater than the loss. They're like, kid, get out of here. Who
Yeah,
knows if you're
exactly.
going to figure this out? So, how did you go about setting that path to getting in front of those investors?
Well, so the assets that we invest in are like extremely liquid, and the
Mm-hmm.
strategy has a very large capacity. And so what that means is that you can accept an enormous amount of money into the strategy and still run the strategy with the same results.
Got
And
it.
the reason that becomes important is because if let's just use some numbers. Let's imagine that you have $1 billion in your fund, right? And you can produce returns of 20% per year, and you're going to keep 20% of those returns. So you've produced $200 million a year in profits for your investors. And of that 200 million, you're keeping 20% of that. So now you have an entity that's throwing off $40 million a year.
Mm-hmm.
Well, now there's real money at
Yeah.
stake, at play. And for a lot of people, I think if they're writing a check for $1 million, $3 million, and there's potential upside of X number of dollars per year, that becomes something that's compelling. So, I don't come from wealth. And this has always been, I approached the creation of this company as a VC type funding, where you're always focusing on like, okay, I'm here right now, I'm at the bottom of the ladder. How do I get to the next step, and the next step, and the
Got
next
it.
step, and the next step? So you just fund each, progression.
So, got it. So, did you start off with your friends and family round, tried that, then go Series A, Series B, and then kept going from there? Or
Well, yeah, more friends than family.
okay.
I actually have tried to not bring family into the circle because of the potential conflict that could come up.
Mm-hmm.
Um, you know, your family is the one thing that you want to never rock,
Yeah.
and so I've tried to like always keep that separate.
Got it.
Um, and
Until
then
you start making serious money, then you'll be like, why did you forget us?
So I mean, there's ways you can give family equity or portions of your business so that
Yeah.
they benefit from your rise. But if they invest a substantial portion of their net worth with you, and then the company doesn't work out,
Yeah,
well
you're
now
gonna
we're
have to see
having a
them
little
at
bit of
synagogue, and you're gonna see them at barbecues and everywhere else. So.
exactly. Yeah, and you don't want that tension to exist.
Yeah,
So, primarily friends, and then networking from those friends, so friends of friends.
got it.
Yeah, and then you kind of build from there. The hedge fund model is not typically pursued by VCs,
Yeah,
because there's a double layer of fees. I personally don't. I think that it should be pursued by VCs, but
Yeah, that's what was kind of shocking to me because I saw you on Crunchbase and I was like, what's going on
yeah.
there? That's usually never, you never see like finance companies in that space unless it's like fintech or something like that. Which you guys have like an AI side, which I understand you can kind of blur the lines a bit, but I never usually see that there.
Yeah, I think there's a few things. I think a lot of VCs want to invest where there's a clear path to exit.
Yeah.
So you have a 7 to 10 year timeline, and you want to exit, um, and sell out at 10x of your initial investment. And the easiest way to do that is when there's liquidity introduced by like an IPO.
Yeah.
But hedge funds don't typically go through an IPO process, and so structuring something where someone could cash out is a little bit difficult. So the investors that I've brought on so far are long-term investors. They want to hold the equity that they've been given pretty much in perpetuity.
Got it. Okay. So you get your funding now. How much did you guys get funding to start off?
1.5 million.
1.5 million. Okay, that's reasonable. And now you're starting. 2020 hits, and boom, the world starts shutting down. Right. So how'd you manage that during that time?
I think as an entrepreneur, you have to be like a perennial optimist.
Yeah.
You have to always see the silver lining. And so for me, the way I approached it was there's two possibilities. Either the world could fall apart, civil society can collapse, in which case, whatever, we're all screwed. So
whatever.
yeah. No, I mean seriously, like you can't really plan for that, because if society collapses, then that's it. It's all over. Or on the flip side, we'll figure it out. We'll get through it. It'll be rough, but we'll get to the other side. And right now I have capital, and there's a lot of people that have been laid off. And so I can find some really brilliant people, convince them to, come on board and start building the company. And so I chose the latter. And obviously you're always like, you're always kind of walking this tightrope, because you want to be sensitive to the fact that lots of people are losing capital, and their businesses are going under.
Yeah.
But at
Meanwhile,
the same time,
meanwhile, there's an advantage for you to take over. Yeah.
Yeah. But you want to be cognizant of like, okay, I still have a responsibility to build this company, and I have a responsibility to get it off the ground and turn it into a profitable entity.
But I mean, that's great thinking, and being an optimist and also looking for the opportunities in there. But you're also now you granted you probably already paid for an office space. You're ready to start hiring. How do you then turn that from we can't leave our house? How do you then operate your business and start operating the business?
Well, I mean, I think the nice thing about like modern business in the information age is you don't really need to leave your house.
Yeah.
Especially when you're dealing with, I mean, in finance, if you're building a machine learning model, you're trading in cyberspace. There's you're basically executing your trades in some warehouse in New Jersey, from your
in the cloud
from your
somewhere.
bedroom. Everything is automated. There's definitely a component of, I think there's a trust that's generated when you meet with someone face to face and you can see their body language, and that trust is essential in when people allocate capital. And so the process of raising capital is much more difficult. But as the vaccines came out and people got vaccinated and people became more comfortable meeting in person, it got a lot easier to start raising capital.
Got it. So how have you been able to differentiate yourself, right? You're in Chicago. There's a ton of other hedge funds. Like you're a little guy on a big block, right? New York, same thing. What are certain things that you guys have been doing to differentiate yourself from the marketplace?
So we like to say that there are three value propositions that we bring to the table. We're systematic, we're liquid, and we're uncorrelated. And so to run through all three of those, we're systematic, meaning that there's no human bias that goes into any investment decision.
Because it's all machine learning, all machines.
It's all machine learning. And you need humans because, well, it's pretty important to have humans, but also, I mean, humans drive research. They can recognize where the machine learning model might be making, an error, because humans have this ability to like look more broadly and get a sense of what's going on, and what errors the machine learning model might be making. But they drive that knowledge into the research cycle to make sure that their hunch, or the idea that they're testing, is mathematically and statistically significant. So that's the systematic component. Liquid, meaning the assets that we trade are easily able to, we are easily able to get in and out of them. And the reason that's important is because you might you might find a phenomenal investment in art or in real estate, but if it turns out that you need to access that capital, well, now you can't access it because
Yeah.
it's not a liquid asset. Whereas our investments are. And then uncorrelated, I think this is becoming more and more important. You want to make an investment in something that does not necessarily fall when the market falls. And so designing a product that, could rise when the market rises and could also rise when the market falls is a really compelling offer. And there's also one more thing that's really important to keep in mind. The finance industry has the opposite problem of most industries. Most industries are trying to, they have too much product and not enough sale.
Mm-hmm.
The finance industry has too much sale and not enough
Enough
product.
product. Got it.
Because there's so much, I mean, if you think about it, like every year, a certain percentage of global production, I don't know what the total number of global GDP is. It's probably something like $100 trillion. But every year, a certain portion of that is saved, right? And then that becomes capital that's in the system.
Okay.
Well, now all that capital needs to find financial products to sit in and to grow. So
and there's not a lot of like innovation happening on that side.
Yeah, it's very difficult to get something like that off the ground. You have to, and a lot of people have done it, but like it requires like a very broad skill set, and it requires you to like really immerse yourself in the knowledge set, and like be able to hustle and be an entrepreneur, and then also manage a team and all of that, and to get that off the ground and to attract capital is difficult. So I think you have this opposite problem where there's too much capital and not enough product.
Got it. So is that why you started like the total return fund, Obsidian, and the other one's escaping me?
Estes.
Is that why you started different, I guess, products to kind of I'm trying to like put it all together so that you can find places for the money to go?
So I think, there's this interesting challenge that a hedge fund is in where it's a very, very scalable product in the sense that like the cost to manage $1 million is basically the exact same as the cost to manage $250 million.
Really?
That's like a staggering fact.
Really?
Yeah. So
wow,
in other words,
I had no idea.
Yeah, it's kind of similar to software in that sense. But it's a little bit better. Like with software, typically, once you develop the product, people can go. I mean, this is why Microsoft became so successful.
Yeah.
Once you have the core software, and especially now where you don't actually need like a CD-ROM.
It's just at scale. You could just go crazy. Yeah,
it scales exponentially. But what's even better than software about the hedge fund model is that you don't even need more salespeople. With a typical software product, you need like a customer support team and all of that.
A back end, people to update it, to continue to keep on improving the product.
Exactly. Whereas with a hedge fund product, some individual, like a single fund, can make an investment of $250 million because they're aggregating all the capital, and your cost does not rise at all. The challenge is that I think this is true in like broader society as well. People want to allocate to winners. So like if you think about like the most successful athletes, the most successful athletes will get most of the earnings because people are most interested in associating themselves with success. And that's true in general in finance as well. And so the challenge that you run into is although you can run an enormous amount of money, people aren't necessarily going to be willing to allocate to you
until you have a proven track record of winning.
Yeah. So there's this curve that you need to move forward from, and so we call that going from like subscale to scale. So basically, like your first thing that you need to crack is 1 million. You need to get past 1 million, and that's more difficult than you would think it is. Like
it's usually like the hardest thing to do is get the smallest amount of money, and once you get past that, it's like everyone else is like, oh, you got 1 million, all right, proof of concept has already been proven, now it's time to grow from there.
Yeah, and well, it also gets easier because your first checks are going to be like $25,000.
Got
and then
it.
You get 50,000, 100,000, 250, 500,000. So you can see like as you continue scaling, it gets easier and easier to get to the next milestone.
Yeah.
So you have your million, your 10 million, your 25 million, and then 100 million. By 100 million, you should be close to revenue neutral, where like the cost of operations are even with your revenue. So the reason we pursued multiple product lines was we felt there's a few things, but if you can design products that appeal to specific market segments, then you can simultaneously capture multiple market segments. So for
Yeah.
example, like Obsidian is a higher volatility product, a higher return product. So it's geared towards like more of a classic institutional investor or family office, that type of thing.
Got it.
Estes is geared towards a much lower volatility product and something that someone who wants to earn a steady return and historically would have invested in bonds, but now needs now bonds don't have any return.
Got
So
it.
it's going to
So
allocate.
someone more who's looking for more of a stable growth over a long period of time.
Yes.
Got it.
And then Obsidian was more of okay, the professional athlete market is like vastly underserved. Let's create a financial product geared towards them. And what we wanted to do was financial products, I think for a lot of people are like what is this? I don't understand this at all.
It's not like a
and
CPG company where you can feel it or touch it.
Yes,
It's like, or
exactly.
even if it's software, you can say I downloaded something. It's like a financial product. What does that mean?
That's a really good point. Like consumer packaged goods, it's a tangible product. If it's a Snicker bar, you can eat it, that type of thing.
Real estate, you could feel, you could see.
Yeah, and a software product, you can interface with it. So it's tangible in like a different sense. But financial products are like very, they're completely intangible and they're very cerebral. They're not something that you can easily connect with unless it's your life, and you love it. And
most professional athletes love the thing that they're doing, not financially.
Yes. Well, because I mean, the way that the modern economy is built, everybody should do what they're really good at and they should focus on that. And then you should delegate the other things to professionals. Like obviously, if you have some surgical issue, some issue that requires surgery, you can go to a doctor and so on and so forth across all different divisions of labor. And so what we wanted to do was we wanted to make products that had their own mood, their own aesthetic, their own kind of like tenor that you could connect to. So like Magma, let's say if you look at the way that Magma's colors are used, they're all to connote movement through different stages of volatility. And a lot of the movement is like upwards to connote growth. And then let's say Obsidian is the stone. Yes, exactly. So Obsidian is like crystallized magma. And so inside of Obsidian, you can see like movement, but it's solid. So
it's like frozen movement, but it's there. Yeah,
exactly. So that's what Obsidian is. And then Estes is like the Latin root of estuary. And an estuary is just an area where seawater comes into and meets fresh water, and you have this whole ecosystem. And so the goal was to create much softer tones and an area where someone could feel comfortable with the growth. And where it would be a lot softer.
You put a lot of thought into the naming of that. Now that you said that, I'm like, that makes so much sense. I didn't really think of the names because I know Obsidian is a stone and I really love the stone and it's really, really pretty, but I didn't really think of all the, that's such a, like you said, a cerebral way of looking at the whole thing.
So it's an easy way to kind of like, we recognize that the average person is not going to dive into the product and look at like the source code of the machine learning, So, but if you have these market segments that are, kind of covered within certain brands, then you can launch multiple products within those brands geared towards that market segment. So like Estes could have 4 funds geared towards that specific market segment.
Got it.
The same could be true of Obsidian and Magma. And then the really cool thing is that the cost of launching your first product, like Magma, which was our first product, is around 8 times the cost of launching your second product.
Wow, because you're going through so much layers at the beginning. By the second one, it's like you're bypassing a lot of that.
Well, that is definitely true, and then also you can use the existing resources.
So got it. Same team, same everything.
Exactly. So if you have a marketing team, that marketing team could help develop this product as well. If you have a group of people who specialize in machine learning, well, they can help develop a machine learning product that works for other funds as well. And so your cost base goes up by like around 1/8. And so you kind of get the best of both worlds, and they're equally profitable.
Yeah.
So now your probability of success rises because you're hitting multiple market segments, and then your cost per dollar of capital that comes in just collapses.
Got it. That's super awesome. I could go in a lot deeper with you, but for the sake of audience and time, I want to definitely get to some of the questions I asked pretty much everybody.
Sure.
But I love the amount of thought that was put into that. This is one of my questions I like to ask. What was your first crucial hire? Like the one hire that you were like, man, this person turned the corner for me and really helped the business a tremendous in a huge way.
Oh, Katie, for sure.
Got it. And who's she?
So Katie was our first hire. She came on as a marketing person. She was one of the initial people working at Industrious, which Industrious is like it's like an upscale WeWork.
Yeah, I know, and they really beautiful spaces, by the way.
Yeah, yeah. So they've done like a really. So I had rented an office at Industrious, and I remember thinking like, this is unreal. Like they have convinced me that an office space, which is just a commodity. I mean, there's office space all over you.
Yeah.
Like all around you, is like a Ritz-Carlton, and now I'm paying many multiples of what the cost is.
Yeah, could have went to a Regis for this same space.
Exactly, but it's so cool because basically they have made it so comfortable,
yeah,
that you're happy to pay that money.
Yeah,
and I was like, okay, I need to hire some of the people from this company so that I can introduce that to the product that I'm trying to build.
Got it. Okay.
And so Katie was one of the first people there, and she had been let go during COVID, and I was like, okay, gotta hire her.
Gotta get
So
her.
I ended up hiring a bunch of people from there, but Katie was one of the first, and she ended up like, she went from doing marketing to doing HR and then now she's our COO and CMO, and we have her thought process really like balances my thought process. So
Got it.
in most like iterative and like ideative sessions, it works really well.
Got it, because you can cast vision and then she can say, all right, let's take it down to the macro and make it happen. And this is what it looks like.
Yeah. So she's really good. I'll be like, okay, like this, we have to pursue the professional athlete space. It's an underserved market. It makes a ton of sense. But I'm kind of stuck in that like 30,000 foot view. She's the one that can actually like make it happen and like, really turn the dream into a reality.
You're 30,000 feet. She's on the ground and she'll build it all the way back up to you. And you're like, that's what I was saying the whole time.
Exactly.
That's awesome. That's an awesome hire. Everyone doesn't think about that. And I like to ask every entrepreneur that question. Also, there's someone who's listening to this right now. They're driving, they're at work, they're miserable behind that desk that they're at, right? They're dying a slow death. What advice would you give that person to help them make the transition into becoming an entrepreneur?
It's a really good question. I think that the beauty of entrepreneurship is that you are the master of your own destiny. And anything that you see in the world that you want to change, you can. When you work for someone, you're limited in what you can do. Let's say someone is frustrated about, how maternity leave should be more generous and should be more widely given. There's nothing you could do about that if you're an employee. If you're an employer, you can actively participate in changing that reality. And I think it really, like, people need to ask themselves, are you comfortable being in that position of stress? And don't get me wrong, there's like an enormous amount of joy that comes from it as well. But ultimately, like, the buck stops by you. And you have to be comfortable with that, and with not, I think being an entrepreneur requires you to wear a ton of different hats.
Yeah.
And you have to find that like thrilling.
Yeah.
But if you do have those skills, it's amazing. It's so much fun.
Some of those hats you might not like, but you still got to put them on.
Yeah. Well, I think like what you do is anything that you need to like really clearly identify what you're good at and what you're not good at. And you start just like shoveling all the stuff that you're not good at towards other people who are really good at that. Like, I'm not a great project manager at all. Yeah. I'm like great at coming up with ideas and, solutions and that type of thing, and never being blocked by a wall and always finding some path around it. But when it comes to like implementation of the idea, that's other people on the team.
Got it.
So,
cool.
Yeah.
So when did you identify that within yourself? Because that also takes a certain level of skill, right? Most people, when they start out, they're like, I want to do it all. It's me, right? Like, when did you identify, like, I'm not that guy?
um, I don't know. I think it was my first job. I don't like fires. Like I think a lot of companies are run where there are always
Yeah,
fires.
they're just
And
running from one thing to the other all day long.
yeah, and it's like a bop it game. You know, you're like bam, 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 bam. And it never ends because there's no system put in place to like change the reality. Um, and that like absolutely drove me crazy. And I think and then my next job was more structural, and so I didn't have to worry about that. I was like, oh, this is amazing.
Got
And
it.
then when I started the company, I was like, well, let me build a company where that will never happen.
Got it.
Um,
Because it doesn't suit you well as a person and your personality trait.
I think it's also it certainly doesn't suit me well. I would love to. I like to think also that it doesn't suit companies well because I think um, as a as an entrepreneur, as like a CEO, your job is to like drive things forward. That like here's where we're headed, and let's
Mhm.
move in that direction. Um, and I think when you're constantly focused on putting out fires, you get really lost in like the here and now.
Yeah.
Um,
And also
and
the
it
vision casting.
yeah,
Yeah, like
and you're not necessarily like moving towards that goal.
yeah. I mean, a lot of people in a lot of large businesses work within that fire. After a while, it's just like fires, and then the growth line gets smaller and smaller. That's just because, the Chinese proverb or Asian proverb, I don't remember which one, maybe Japanese, says the fish rots from the head down, right? So,
Hmm.
yeah. So if the head is not doing well, then that's how it all works. So, I always tell people that when I coach them, like, hey, everything starts with you and everything ends with you. So anything that you don't like, you created it at some point or another.
Yeah,
So
that's a great line.
yeah. So this is the last question I ask everybody that is on the show. The show is called the H4 Hustle Podcast. What does hustle mean to you?
I think it's the act of like never seeing a dead end.
Mm,
Um, there's always some way around it. And that might be through like, I know this guy who knows this guy who knows this person, etc. And so I'm going to execute this plan to get towards that. Um, because I don't think there ever really is a wall. Like there's never a wall that should end some company. There's always some way to like push past it through innovating, through coming up with a different um, roadmap, etc. So I actually like to use the word hustle a lot because I think it's like really important for an entrepreneur to have that mindset to like
yeah.
always be moving and always be coming up with solutions to problems.
Yeah. I like to tell people hustle for me is like what Bruce Lee says, be water. Water sees
Yeah,
a block, water moves around the block. Water
exactly.
always finds a way, just
Yeah,
always goes. So, guys, that was Geershie Vann, the founder CEO of Magma Capital Fund. Geershie, thank you so much for being on the show.
thanks. It was a pleasure.
Thank you.